Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. Overnight in the US, markets rose, led by gains in software stocks. The S&P 500 advanced 0.77%, the Nasdaq gained 1.04%, and the Dow added 0.76%. In Asia, Nikkei jumped 1.2%, and the broader topics was nearly flat, up 0.04%. Australia's ASX 200 gained nearly 1% in the early hours. In India, Nifty tumbled 288 points yesterday and closed at 25,425, whereas Bank Nifty ended at 61,047, down 217 points. The index witnessed a sharp sell-off as Nifty IT plunged nearly 5%, compounded by rising crude prices and weak global cues. A strong bearish candle was formed, but a lower shadow indicates support near the 200-day SMA in the final hours. The 200-day average, which is around 25,338, has now become the make or break level for the market. Holding above it could lead to a pullback towards 25,500 and the 20-day SMA near 25,595. However, for bulls to regain firm control, a decisive close above 25,800 is essential. On the downside, a break below the 200-day SMA may drag the index towards the gap area near 25,108 with interim support at 25,256. Meanwhile, the Nifty IT has broken down below the 31,000 level, confirming a classic head and shoulders pattern. This suggests the sector could continue to face near-term pressure. Foreign institutional investors withdrew 103 crore rupees yesterday from the cash market, though the month-to-date net inflow remains robust at 22,116 crore rupees. This liquidity shift occurred as the Nifty and Bank Nifty indices succumbed to a liquidation event during the February monthly F&O expiry session, following bearish global cues and expiry-led washout rather than a structural reversal. This was further evidenced by a VIX price divergence, where the India VIX fell slightly by 0.12% to 14.15 despite significant bearish price action. However, the derivative setup for the March series leans bearish. In the expiry session yesterday, Nifty and Bank Nifty futures both saw price declines coupled with OI increases of 35.9% and 18.7% respectively, confirming a short build-up. This was heavily influenced by rollover adjustments. Nifty rollovers at 68.2% trailed the 6-month average of 75.6%, signaling cautious sentiment, whereas Bank Nifty's 74.3% rollover, exceeding its 3-month average, suggests localized banking resilience. Despite rising premiums, 176 points for Nifty and 392 for Bank Nifty, a sharp drop in the PCR to 0.91 and a 2-to-1 call-to-put trading ratio indicate aggressive overhead resistance. Structurally, FIIs have slashed their long-short ratio to 0.27, shifting toward a futures-heavy long bias while abandoning high-delta options, leaving retail investors isolated in their extreme optimism volatility bets. Consequently, the March series opens with a heavy tone, where 25,800 stands as a formidable ceiling and 25,000 acts as the primary floor. Sectorally, Nifty Metals gained 0.93%, while Nifty IT fell 4.74%. In F&O, Bandhan Bank rose 4.33%, while KPIT Technologies declined 6.48%. On commodities, gold fell 1.6% to around $5,142 per ounce as investors booked profits after a rally driven by US tariff uncertainty and Middle East tensions. Markets remain focused on geopolitics, with the US and Iran set for a third round of nuclear talks in Geneva on Thursday, despite ongoing military and regional strains. Copper rose 2.6% to $5.93 as Chinese traders returned after the Lunar New Year holiday. Sentiment improved after the US Supreme Court struck down President Trump's reciprocal tariffs, raising hopes of lower trade barriers. WTI crude ended flat near $65.86, hovering around a 7-month high as traders awaited updates on the US-Iran nuclear negotiations. That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments and securities markets are subject to market risks. Read all the related documents carefully before investing.